Oh, on staying in the lane.
Yeah, I think that's a thing. You know how we get down here in Florida when somebody's all in that fast lane.
Oh, I was thinking biking. On your right.
Oh, you get shot down here. Catch you on the highway, not going to speed. We'll see. Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How we doing out there? Welcome to our show. If you've never watched our show before, here's a different angle of the studio. So that's me hidden behind the lights there. You kind of see it way over there. You got the Wine and Wealth studio, and then the workings off to the far left of the eventual FinTips, bringing that back, trying something a little bit different over there. So we are working on that to get it all dialed in and bring that back to you. But that's kind of what it looks like. That's at least part of it anyway. So thank you guys for joining us here. Also, Wine and Wealth, speaking of that, this Thursday we're going to do cash flow tips, tricks, reminders, and advice going into sort of following up with what we talked about last week, which was your New Year's checklist to keep your dough straight. So we'll be covering that as well. Also, quick little bit of homework here, if you don't mind. If you're one of our clients, what you're going to do is go into your portal. This is what your portal looks like. We built it custom here from scratch. This is a sample one. And right here, over off to the right, you see your updates there that we get to leave for you. We're doing something called a fin task, and I've created a whole checklist of things that I want you to kind of get prepared for the new year to help you keep your dough straight. That's what we covered last week in the Wine and Wealth class, and so we're just going to expand on it, right? So every month we're going to have a topic, and we're just going to dive into it. And well, we're talking about your dough, right? The new things you can do for this year. I got a bunch of cool ideas, and also there'll be a new fin task. I've got a bit of an article that I'm posting in there for you guys. Trick that maybe a lot of you can do tax-wise for this year. Try to keep that tax bill down and not just the normal crap that you see on YouTube and all that happy stuff. Also, a little bit of help, if you would. So we are, as a company, we're going skiing in 2 weeks. We're just going to go to North Carolina, find some snow, and slide down the hill on some stuff there. And we were debating today, Cody had the question, do we, as Floridians who don't do this, do we stay on the right side of the slope like you would in a lane ride? I think that's the case.
I think it's kind of a free-for-all. I think once you get out there, it's just go, go, go.
I don't know. If you saw
you
earlier...
fall in the middle, you fall in the middle. The good ones get out of the way.
You get out of the, but they get out of the way of you.
Yes.
See, I don't know. I think we have to stay on the right, do a little V thing, or if you're on a snowboard, you just have at it, I guess, right? We could use the help. We don't want to be idiots up there. I mean, this is not our thing. We don't do this. But in 2 weeks, we're going to do that. So if you have any questions or anything you need help with, of course, here at Jazz, we're one of our clients. Now would be the time to get it in because we're going to basically just close up shop for a couple days, take a long weekend and see how that goes. Come back with broken arms and whatnot. So we will do that. Now let's take a look at the markets here today, because we got the all-important inflation numbers. Did you know that inflation hits 7.04%? There you go. So we were expecting 7.2. We talked about that. If you get anything under the 7.2, that would be seen as good news there. I don't know how you say that's good news, but 7% inflation. There you go. So that's what's happening out there in the market. And we responded positively to that. So a little bit of selling and then a little recovery towards the end of the day to basically summarize the market. We also have more cases than ever of COVID. Apparently everybody's going to get COVID. Hospitalizations have hit a record as well since the start of this virus that we talked about there. And White House continues their stance of, hey, we don't have a plan. States need to deal with it themselves. They moved on to voting rights and such. And so what we have is really just like an acceptance, it seems like. As far as the stock market goes, they've just accepted that this is how we're going to move forward. And I don't want to say it's not a big deal, but that's the vibe going on in the stock market. And so because of that, that's what you have here. You have the S&P, a slight gain on the day, still not too clear of the 50-day moving average, so there's a chance we see some weakness going forward. Also, the Fed Beige Book came out, more talk about, of course, yeah, we're going to have to raise rates and do all of that. I'll cover that in a second. But inside the S&P here today, you're going to find AMAT being your best performer, almost back up to new highs there. Tesla in the news as well. We'll cover in just a moment, up 4% basically. And you had the sneaking in of a lot of those boring names again, that money not giving up there. Nucor, Mosaic, almost hitting new highs. Some tech stocks in there as well, but Advanced Auto Parts, Pool Corp, all seeing little bits of recoveries there. You're going to find a lot of semiconductors, Lam Research being one of them, KLA, Tencor, and energy, right, along with financials as well. But energy, oil stocks all hitting new highs for the most part. and that's what you have going on in the S&P. If you look at the NASDAQ, you also have a slight recovery there. But as we break down the NASDAQ, you're going to find the semiconductors, Tesla, and things like that. You also find some biotech in there, Dexcom, healthcare as well. This is the week of the healthcare conference, so a little bit of excitement going on in the NASDAQ. I thought EA Sports was starting to look interesting here, about a 1.33% gain on the day. Alphabet gaining 1% as well. And then other names that you're used to seeing, Microsoft, Micron, all having good days. But you have those slow and boring names that are back in the mix as well. Honeywell being one of them, and CSX. Just to point out a couple names there. So that's what you have going on in the old NASDAQ. The Russell was your laggard here today. It actually closed down the day negative. If you look at the Dow, just a slight gain on the day. A couple leaders. I mean, I didn't find anything you would just go crazy about. Salesforce.com had a good day, and I've closed that position. I closed out the 210 puts, got 49% of the total premium, so that's the end of the Salesforce play. To bring that to your attention. Nike, also a little bit of a recovery as well. Still have the 140 puts on that one, and not much to do there. No, I closed that one today, didn't I? Felt like I closed that one. Let's see what we got here. Just want to keep it straight. No, still got the Nike play. Got a 37% of the premium on that. Still holding on. Had I looked, I probably would have closed it. So that was my mistake there. Anyways, you got Goldman Sachs taking a little bit of a break in the financials. Johnson & Johnson also pulling back, and Walgreens being one of the weights on the Dow for today. If you look around the market, you're going to find the dollar. So the dollar falls because of inflation data there. That gives gold another reason to try to wake up. It's not doing much, but gold trying to break out of this consolidation garbage-looking area here like it did when we found out inflation was starting to spike. And I don't know. I think it's a tough one to say that gold's still a good investment or a good trade here. You run the risk of falling into this sort of dead money trap kind of an area there. So I'm not sure about that one. If you look at oil, you're going to find oil was up on the day almost 2%. Week over week data shows that there's been a drawdown in oil. That means that there's more demand, hence the price is going to go a little bit higher. And that's the reason your energy stocks did well on the day. And if you look at bonds, kind of a flat day for bonds overall. I closed the TLT position. There you go. So TLT is done for me. I had sold the puts on that one, closed it for 31% of the total premium. And I got a question from someone who said, will the Fed raise rates before tapering all of their bond purchases, or will they do some combination? And I thought that was a good question because the answer is no, that would be bad for them. So imagine them raising rates on the very bonds they're purchasing, right? So they're forcing prices lower as they're raising the rates. So they're getting that spread widens for them, and it ends up costing them more money. They would not raise rates while they're buying bonds. Maybe like the last little piece, but other than that, I don't see that actually happening. And if they did that, it would mean that they felt behind, right? They had to take sort of an emergency move to do that, thus eating the extra cost that it would be to them. Now remember, they're still they'll be holding about $6 or $7 trillion on a balance sheet, so rates aren't going to go up fast. So I hear a lot of this talk about people, I got to buy a house, I got to hurry up, rates are going to go up. They can't actually go up fast because in order to, quote, normalize their balance sheet, that would put them around $5 trillion or so, according to them. They're at 8.7 trillion right now. So they want to normalize, get to a point where they're holding about 5 trillion, and that's going to take a couple years if they're able to do it all in one shot. So you won't see like a rapid increase in rates because that would hurt them as well, right? So it wouldn't be something that they would be focused on there. Now, as far as the stock market goes, we wanted to take a look and see where's all the action. What's everybody looking at so far this year to date? And as we often do, we'll take a look at the market, break it into chunks, 10 chunks, pretending we're building portfolios out of 10 different chunks. And then we'll rank them by some factor. In other words, we'll say, we want to know the year-to-date returns by dividend yield. We want to know the year-to-date returns by PE ratios or valuation to some other metric that you want to use there. And so what we did is we did a real quick one here today. We said, all right, let's break down the performance of the stock market as a whole in 10 different chunks, ranking the stocks from paying no dividend all the way to a low dividend, slightly better, all the way to the highest total yield, I should have said. I said dividend. And so you very quickly can see that the stocks that pay little to no dividend are the worst performers. All the money is going over here, right? Everybody's interested in buying pullbacks on stocks that have a higher total yield. And so you have an average return of the stocks with the best total yield of 1.93% and working your way all in here. So in other words, stocks that do have the highest yield have performed the best to start the year, and that's where the money would be going there. Now, I can't actually tell you what stocks to buy, or I can't make it look like I'm doing that. And so I thought, I need a workaround. So what we did is we said, okay, here's every sector. This is the average yield by stock in every single sector, to give you an idea where you should be looking if you think that this is going to continue. So utilities currently have the highest average yield by stock at 2.93%, and then Reits, they are typically the leaders of the pack anyways, 2.77 for Reits, and then you have financials. A lot of people like financials this year, and with that higher than average yield across all the other sectors, maybe that's somewhere you want to look, especially if you get a pullback. You saw Goldman Sachs already starting to fall there. So I'm trying to make your search a little easier. And then you have energy. This is supposedly the year of Finergy, financials and energy performing well, and they're already doing pretty good. They're the best performing sectors out of the group this year. So it gives you an idea where to look. The lowest dividend yields, or next to no dividend yield, is going to be tech at 0.33% and healthcare 0.13%. So that's gives you an idea that those maybe aren't the best performing areas. In fact, healthcare has the worst return so far, one of the worst returns out of all the sectors at minus 3.17. Tech would be the next worst one at minus 2.95. So it gives you a little thought of how to maybe go and take a look at things like that. So again, the best performers are the high dividend yielding stocks at the moment in terms of average gains overall. I hope that helps. That's a different way to look at it, huh? A couple other things here. So I closed a few positions. If you've been following along, I just want to bring that up. We talked about TLT being closed there. We talked about CRM. Also, let's go wrong page. Bath & Body Works. So closed out Bath & Body Works there. 37% of the total premium was closed. So that leaves me with just a couple left over here. Got Starbucks still, Adobe, and Shopify, and what was the other one? Adobe, Nike. Nike's the one. Adobe, Nike, Starbucks, Shopify. That's all I have left on those trades there. Starbucks is the worst, by the way, with that continued drop. Other than that, Nike doing okay. Adobe about 15% of the total premium. Shopify is still down about 6% of the total premium. And like I said, all of this will be coming up very soon over there. Oh, you can't see it. So we'll show you the rest of the office tomorrow, because off to the far left, we've got our little trading area where we're going to sit and talk about it. But I plan on teaching along the way instead of just saying, look at me, make or lose money. I want to teach as well, because I like to do that. So that'll be coming up hopefully at the start of February. If we look at the new highs and lows today, there were 37 new highs, one new low. Biogen was the one there. They got news that maybe they were not going to be able to offer their Alzheimer's drug to everyone, only those that were involved in the study. So that was the only low on the day. And guess what? Finergy. Finergy was the leaders. Let's go over here. You've got Apache hitting new lows. Now, careful. These are getting extended, right? So especially in the energy space, those stocks are getting extended. Financials have yet to really commit. They're doing great. That's fine. But they've really yet to commit when we compare it to something like energy. So Apache was one of them there. Halliburton hit new highs as well. You'd like to see that one pull back, maybe offer something up there. And ExxonMobil hits new highs, but again, extended. How do you jump in on something like that after such a good move? In the financial space, this is going to be the bulk of the rest of your new highs for the day. Wells Fargo, I just try to point that one out because that one is strong. It's stronger than most of the others. It hits new highs, but it is extended, so something maybe you want to put on a watch list. And People's United Bank, right? People's United something or other. People's United Financial. That hit new highs, but also extended. So as far as the regional banks go, I was trying to point out, okay, this is one of the ones that stands out. Wells Fargo stands out as far as the big banks. And that's what you have. Nothing really exciting to also offer in terms of a new breakout to highs that you could get excited about right now. It's kind of watch list time. You're building a watch list, starting to take a look at what's going on there. Stocks in the news today. We'll start with Ally. Doing good things over there at Ally. They're also buying back $2 billion worth of their shares there, and they raised their dividend, I think, to 30 cents. So that's the reason you see that one being one of the performers here today. typing in the wrong spot. All day I've been doing that. The next one, you can see it on the list, is Humana. There you go. So a little bit of a rally in Humana. That trade is over for me. It was the other day. But that one's in the news today because they are also doing a buyback, and I believe it was $1 billion faster. They're doing, what do they call it? Accelerated buyback is what they like to refer that to. Tesla's in the news because there's a hacker that says he successfully hacked into 25 different Tesla vehicles. I didn't read much more into it. The stock really was a little bit higher today, not a big deal. I don't know if that's true or not, but that was the headline. General Motors in the news. They are going to launch a used car platform called Car Bravo, I think it was called. A shopping platform. They're launching it in the spring. It is called Car Bravo there. I don't know why they're doing that. I didn't see what the benefit was, but they are in the news. And Novavax got the approval in South Korea for using the COVID vaccine over there. Didn't really affect the stock much at all, but that was their, they got the green light, essentially. Now, we've got earnings coming up. This is really starting tomorrow and then next week is where earnings season starts to peak up. We have Delta, that's one of them reporting. So we got Delta Airlines coming out. Delta Airlines beats 69% of the time on earnings, and the last 3 reports have actually been negative. They are more often, the stock responds by falling rather than bouncing. In fact, over the last 8 reports, only twice has the stock released earnings, and the next day found itself higher. So, I don't know, a little bit there. You got some Fed members speaking tomorrow as well, 2 or 3 of them, I believe. You still have the JP Morgan conference going on, and there's a new, what is the one? Needham has their stock growth conference or something coming out as well. And other than that, that is your day. How do you feel about the inflation? You feel it, right? I mean, I think most people, I get emails all the time, and people are like, I don't know. I'm having a hard time hiring people. I'm spending more. There's no doubt we're all feeling it there, but 7%, holy God, that's crazy. We will see what happens there. So question in Alibaba or China stocks as well. If you look at Alibaba, that one continues to hint that it's maybe making a low. You want to look at the A shares. Got a nice recovery today. It's just the start of it. It's very hard to say that that is the beginning of something, but FXI, which is a way to look at the Chinese markets as well, that's a decent bottom. We've seen it before where it's been a fake out there, but that's a decent bottom with more volume this time. So I'm hopeful. I don't know the exact answer there, but we'll see. Not a big deal for the hackers. All right. Yeah, I figured as much, huh? Stock still, it was basically hate news is what you're calling it. Let's slam on Tesla. Apple a little bit higher on the day as well, but the action is really in the dividend stocks as well as banking stocks as well, and energy, of course, you know that. Hey, if a spouse passes away with an HSA, can you roll it into another? You can have a beneficiary on your HSA. Absolutely. Works just the same as like a IRA. You would list a beneficiary. If it's your spouse, when you pass away, your spouse takes over just as if it was theirs the whole time. So nothing crazy there. It's much better than going through probate and all that great stuff. Yep. I saw T-Mobile. I actually liked that drop on T-Mobile. It's already started to recover just a little bit there. But you have them, and then I was just looking at Take-Two. I was reading through the acquisition of Zynga. That's good news for them. I think the street's starting to realize that. That makes Take-Two like instead of being just a pure like console player company, now they're like some ridiculous amount into mobile as well. So they're becoming more and more mobile, which is a good thing. So that was the justification used for paying what they did for Zynga. Yeah, what's your opinion on holding a leveraged TQs in the Roth IRA? Nope, trading only. So trading only for leveraged ETFs. It's not really something you want to hold as a long-term investment, and they actually tell you that. You read the prospectus. It's like on page 2. They outline why it's not a good hold, a leveraged product like that. Yeah. Are there any instances of shady downgrading by so-called analyst manipulation? Oh, all over the place. Yeah, not so much recently that I can point to anything, but if you ever watch, what's that show? I don't have cable anymore, so I don't really watch, but American Greed is the show. Yeah, they talk a lot about that, where There's maybe like wannabe analyst kind of stuff where they talk in code and they figured out like languages and stuff. It's kind of fun. Yeah. You want to buy Square? I don't know, man. I want it to bottom for you. Well, how do we know? You know, that's a tough one to say that this is the bottom. You might be looking for a higher low here, which we haven't had in months. So I'm not going to wave my hands around and say that's it. No. I know. We'll see what happens there. American Greed. That was the show. Yeah, I couldn't remember if that was the name or not, but I would love to have Stacy Keach like be a narrator for something. Like you just hear it and you're, oh my God, that guy's voice is just spot on. But so I even looked into like, could I hire him to narrate something? You can, but then I was thinking, well, people would associate me with a ripoff. You know, I just like his voice. I just thought it's a cool voice. I mean, of course, the first is Morgan Freeman, right? You get Morgan Freeman to narrate something. That's something. What's that? So Jason says, what's a typical percentage of a portfolio to move to short-term or corporate bonds during inflation? First, I would say, why are we going to, if you have a choice of anything, why are we going to go there? But that's such a wide question to answer because for you, like how does that, there's no general answer to say, this is typical and it should be just fine, nor would I be allowed to say that without getting in trouble. Hey, what kind of earnings do we need to see a further down move, or does that even matter to the market lately? I think it's the tech stocks. So really, if tech stocks don't show up with stronger overall earnings, that's what could help push the markets lower. Because it doesn't matter if a utility company says, we missed by 3 cents. They may have a bad day, but the market's not going to have a bad day. But if we start getting a lot of these bigger tech companies to say, we were close, we didn't have quite the earnings we expected there, or we're a little bit worried about inflation as far as our prices. We've only raised prices as far as we can. We're worried we won't be able to raise prices anymore, but inflation is causing us higher costs, so we really need to raise prices. If we start hearing a lot of that, those tech stocks have a little bit of weakness. That bleeds into the whole market. That could pull us down. Yeah. BK, when does the research show start? So it would be in the research site. That's up and running. You can do that anytime. The show should start, I'm hoping February. We have one more monitor to get, a little mic-y thing so you can hear what we're saying. But yeah, it's to be laid back. We're not trying to make this like you're not interested in the glam and, it looks great. You guys are so cool. No, let's just get down to it. So we're going to make it kind of like a fun lunchtime thing where we just go through and teach while we do some short-term stuff. How high do you expect ExxonMobil to go? Well, one thing you could do, you could use the research site. You could say, hey, look, in the past 9 days, it's gained 16%. Is that odd? You could actually see what forward performance would look like. From just looking at it, though, when you have this kind of a rapid move, you don't, I can't tell you what to do, but you just don't buy it there, right? You don't think in those terms. So you're definitely waiting for a pullback, and then you analyze. Then from there you go, okay, it's pulled back. I got a better price by waiting a little bit. I realized it was overbought. Now from here, what's a realistic target? And that's where I'd pull up the research site and just start diving into things like, when it does that sort of move, is it realistic to expect 10%? Or does it sort of flounder around for a while? That's what I would do. I don't know. Yeah. S&P the place to be. A lot of people like that. Since COVID started, the whole index fund world, it's like just buy index funds and go away. They're gone. I don't know. You people that are like, index funds are the way to go. Well, as soon as there's some action happening somewhere, you're quick to give up on those index funds and go buying and selling stocks. As soon as the market starts to have a rough year, like where we gain or lose like 3 or 4%, something like that, everybody gives up on trading stocks and they go right back into just hold the fund. Come on, you can't do any better. But all those people just got done trading stocks. That's the fun part about it. So it's like anything else. But I don't know. I think the S&P does have a more volatile year, but does that mean we finish the year negative? I don't know. I never understood that because humans determine the end of a calendar year. If the calendar year were, think about it, if the calendar year were 5 days later, we wouldn't have had such a great return in the S&P. Only we decided that this is the end of the year, right? If your year was from Jan 5 to Jan 6, you had a worse year. But if your year's from Jan 1 to December 31st, you had a great year. So I don't get that. Research members, watch this Thursday. Last Thursday's is available. It is in there. This Thursday is, probably. Yeah, the only ones that I can't show would be things where we get more specific about individual like strategy or stuff like that. I get in trouble for that one. I haven't gotten in trouble yet, but they say I would get in trouble if I do that. Yeah. When is the starting companies report? It started already. Just the bulk of it starts next week. So you'll see all the financials come out, and then we really get those hits every single day. But earnings season is already technically started. Unofficially, we say it starts with financials, which will be next week. I'm on index funds with a large set percentage and always have a little fun with some side money. There you go. Yeah, there's nothing wrong with that, right? You got a lot of our clients do the same thing. They're like, hey, retirement is your thing. That you have that eye, that's what you train for, and that's fine. But I like to do a little trading. That's fine. Not me, but the client. So totally cool. Nobody says you can't do that. Yeah. I hear you. Is there a show? Oh, you saw it. Okay. I like it. Well, I appreciate you guys hanging out. I'll be on my way now. Get back to work and do what we do. We'll be back tomorrow to do this all over again. I wish you a great rest of your day, and thanks for watching. See you.